Good evening and welcome to my end of the week recap here for SPY and trade plan for next week. Now, excuse me, Friday I had some protection on these 280 puts here at 17 cents. Had an order to sell at 55. I got some positive improvement here on Monday and it took me out at 57. So nice little protection play there, made up for some of the drawdown in my other positions and went on from there. Monday couldn't really do too much else. I was very busy and couldn't really even monitor price too much. So Tuesday had a nice gap up. I was assuming we were going to tag the 50 SMA in the near future. So I was looking at these 285 calls here. I got in at 47, added at 48. The initial drop right here at what time is it? 9:45 took me out here at 41 cents. Looked like it was going to be a rejection, and I may have been wrong. So once that failed to follow through, I re-entered these same calls here at 45, reduced some up here at 69, and this bearish engulfing bar took me out here, the rest of them at 62. So nice little trade there. Midday, looked like we're going to break down once we put in a high, another bearish engulfing bar. So took some 284 puts here at 107. Those trailed me out over here at 111 since there was no follow through. After that, we put in a base. Right here, I traded these 284.5 calls here at 127. I had my stop way too close right here. I don't even know why I got out at 133 right there, but just above a flat trade. And fortunately, I didn't hold it too long because it failed anyways. And this is not the environment to really be trying to swing long in SPY, or short for that matter. I mean, your price just going back and forth, back and forth. So, anyways, end of the day, I added these 284.5 calls here at 68 cents. We had a gap down here on, I believe this was, what's that, Wednesday. Those almost went to zero. I actually was able to get out at 0.08 cents or 10 cents, somewhere around there. I don't have the note on here, but they almost expired worthless. So anyways, once we gap down, I have a very specific trade setup I look for when SPY gaps down, and it triggered me into these 283 calls here at 48 cents. Once I saw sellers on the tape here, I closed them out at 61. I held one to see if we would actually move up to the 50 SMA, which we did. So these went 283 calls. They went $2.50 in the money. Would have been a tremendous trade, but it trailed me out right here at 90 cents. From now on, when I have these trades and we start to reclaim the 8 EMA right here on the intraday basis, I'll do my best to trade trail my price or my stop price based on that 8 EMA. So I'll be able to capture some of those larger moves. Later on, I had a nice flag set up here. I took the 284 calls here at 84, reduced some at a dollar flat, and the remainder trailed me out here on some slippage at 0.82. Another trade I took Thursday, or was this Friday? No, this is Wednesday, excuse me. Had a base set up here, took 285 calls here at 55, almost immediately stopped me out here at 54. And then I tried another trade here, 20May2019 calls here. It looked like we were going to pop up through these moving averages. I was telling guys in a trade through chat room the funniest thing that would happen is if the market makers and robots let the bears think that, they're shorting versus resistance and have their stop just above it and we just rip up higher. So started adding towards these because I thought it was going to be a big move, a powerful move up higher if that did occur. As it turns out, that's exactly what happened. And these 289 calls actually went in the money. So. But I did reduce some here at 50, and the rest trailed me out here at 73. This one I actually did trail by the 8 EMA. Once it broke below, that was my key to get out. They did go in the money, so I left a little bit on the table, but hey, I can't really argue with, was that a 300% gain, whatever. Now I did have these 282 puts here overnight as insurance just in case this was legitimate support, and we did start to push lower. On the open, once we gapped up, I knew that was not going to be the case, so I closed them out here at 21. Excuse me. So Thursday, after this run up, I told the guys in the trade through chat room, I said, hey, VWAP's right below. We're going to have a dip and rip type of setup. We got VWAP and 21 EMA right here. So I took these 288 calls here at 113, and this drop right here actually stopped me out here just below break even. But that did not discourage me from trying to take another trade. We had a base set up here, which confirmed the dip and rip. Took these 288 calls here again at 116, took some off at 130. Once it rolled over and broke the 8 EMA again, I was out here at 128. So nice little scalp there. End of the day, I took these 288 calls here at 69 cents. Now on the open, these opened up and I think hit low of day around 8 cents. I know they were less than a dime. I forgot all about them. I assumed they were going to be zero and just kind of left them. Fortunately, I went to look at my positions later on in the day and I could see that I was up on them. So I went ahead and closed them out. right here at 81 cents. So worked out nicely. They did go into the money. So luck was on my side there. Now on the open Friday, another one of these gap downs. There was a very specific trigger. Took me in these 286.5 calls here at 62 cents. Reduced some here at 78, reduced some more at 80, and the rest trailed me out at 72. Ideally, I want to get in the habit of holding these all day because they do have tremendous moves when this trade does trigger, and can really capitalize on them in the future. Okay, so there was news that came out. China made a note that they did not agree with the U.S. sanctions on Iran. I think that's what was caused this drop here. I know there was a negative China statement at this point, so once that took me out, or once that came in, I closed out my position right there. There's no follow through on it, so I got into 286 calls here at 89. Nice little pop here. I scalped out for 16 cents on those out at 105. The rest trailed me out here just below VWAP here at 77. So that trade, since I take the majority off up here, it ended up being green, well above a wash. A flat trade. It wasn't a wash trade, so nice little spot to lock in profits there. Once this put in a bear flag, rejected up here, I wanted to be prepared for a breakdown. So I took these 283 puts here. I was under the impression that maybe we're going to close the week flat, which would have been 282.5. So these would have gone in the money, and they were only a dime. It was a very small position. It was worth a shot. Basically a lotto trade. Did not follow through. End of the day, I did take some more protection over the weekends. Reason being is last weekend China waited until late Sunday night, early Sunday morning to go ahead and put out a negative note, which caused us to gap down on Monday. So I want to be prepared for that if that does occur. I'm in these 280 puts here at 13 cents. I'm not expecting them to go in the money, but my target is around 280 to 277. Now 280 simply because we broke through the high of the October-November range just barely, and maybe we're going to come down to the bottom of it, which actually is around 260. So we'll see what happens with that. Now on to my trade plan for next week. I am actually intentionally looking for some short setups. If we break below this trend line, first of all, we have to open flat. If we open flat and push down below this 285, I will take Friday expiration 285 puts. Target 1 is going to be 280. And below there's 200 SMA, which I will flip and look for 277 calls about 4 weeks in the future for a swing, possibly. But I need to see the 15 or 30-minute chart set up for a support area. And I want to go to E-mini futures because it is a lot more fluid than what SPY does. SPY's been gapping back and forth over the past few days, and E-minis, when you take into account the pre and post market price action, is a lot more fluid in what it's doing. And as you can see, this is the kind of nonsense I have to deal with think or swim. Now that the chart is loading, that's not even the chart that I want to see. Here we go. Price action put in an inside bar. This is what I'm interpreting as a bearish harami. We had what looks like a dead cat bounce up into the prior breakdown level around 2900, 2890. And we put an inside red bar on elevated volume. Now that means there's a battle going on here. There's participation inside of Thursday's candlestick, and we're now below my significant moving averages, at least for my purposes of trading, the 21, the 8, the 50. So right now, looks like we're going to have some bearish movement, and down here is the overall target, 2800 to 2780. So right now I'm treating this as a bearish harami inside of a dead cat bounce type of trade after this huge double top. I don't think we come all the way down to 2400, 2300 again, but that does not mean it's impossible. Just saying, I don't think it's very likely, but we did it once. Why not do it again? So if that happens, I will be happy to load up on some positions way down there, because that means a lot of stock's going to be undervalued again. So anyways, this is E-mini futures. Bearish harami setup on the daily time frame. I also want to touch on transports because I do like to utilize Dow theory in my trade plans and how I analyze the market. Okay, price action pushed up and was a big, beautiful green candle here towards middle of the day until the sellers took over, whether it was news related or whatever. Rejected at the 21 EMA, broke below the 50 SMA, broke below the 8, and now below the 200. So this is a very bearish setup in my opinion, since price action is below every significant moving average. after a bounce. Again, looks to me like a dead cat bounce. I have this alert here at 188.62. If it would have broken Thursday's low, there's going to be a lot of bull stops below there. Now, volume doesn't really come into play too much for transports. As you can see, it's 100,000, 50,000, 200,000 shares traded a day. It's just something that I use to gauge how price action is moving for transports. Now, as I zoom out here, it looks like we may be setting up as a head and shoulders. Here's one shoulder, head, neckline's going to be somewhere around 185, maybe even 180, all the way down to 180. But we're possibly putting in another shoulder area over here around 192-ish area. I don't like to trade the bearish side of the tape, but I have to be aware that we are setting up in a bearish setup here for transports, E-minis, and of course SPY. So all worth taking into consideration before I take any swing or any new swing positions in trades, and I will be cautious with those. So for now, it looks like I'm going to be stuck with taking scalps, both long and short. So we'll see what happens going into next week. If you have any questions or comments, please feel free to leave them down below. Have a good weekend and good luck on Monday.